I'm JP Gervais, Chief Economist with Farm Credit Canada. The USDA just released its most recent update of supply and demand conditions for agricultural markets in the US and globally. And I want to summarize what really stood out to me for Canadian agriculture. So let's start with soybeans. It's really it's a supply story for soybeans right now. Yields have been revised upward this month for soybeans. So there's a lot of US supply coming in into 2018-19. The stock-to-use ratio projected at the end of the marketing year has been revised upward, so likely putting pressure on soybean prices throughout the year. There's obviously also a demand story because of trade tensions between China and the US, but there's no resolution in sight, and the USDA has left its estimate of US exports of soybean unchanged from the previous month. So it's really about supply right now in the marketplace. In the corn market, corn is really fighting really hard to actually not fall in the same storyline as soybeans, because yields have been revised upward for corn, so there's a lot of corn supply as well coming into the marketing year. The thing that's different from soybeans right now is that there's a strong demand right now for corn. Export demand has been revised upward. Demand for animal feed is very strong. So, but at the end of the day, this current report is bearish for corn because there's going to be more corn in 2018-19 than that was previously anticipated by the marketplace. For wheat, estimates of production stocks were left unchanged. Overall, I think it's really to keep an eye on global market conditions, the dry conditions in Australia and Europe, and how this is likely to impact the wheat markets moving forward. There's also a story about the US dollar. The US dollar gained about 5% in the last 6 months, and a stronger US dollar makes it more expensive for buyers of commodities. And so that's definitely something to monitor moving forward, especially when we think of the strength of demand for wheat, but also corn and soybeans. Now, on the livestock side, estimates of beef production were left unchanged from last month. Pork production estimates were revised downward. Having said that, there's still a lot of beef and pork coming in the marketplace in 2018 if you compare that to the levels that we've seen in 2017. Estimates of 2019 production were revised slightly upwards. So again, there's a lot of supply coming in. Now, the good news is that, especially on the beef side, demand is especially strong, both domestically in the US and Canada, as well as in international markets. So that has actually supported beef prices and cattle prices at a reasonable level. On the pork side, it's going to be challenging for producers in the short term. One of the things to monitor is the evolution of the African swine fever in China. That could turn out to increase demand for Canadian and US pork in the medium term. So definitely keep an eye on the evolution in that situation. And finally, for dairy, production estimates in 2018 and 19 were unchanged, but the industry in the US, the dairy industry in the US is still growing. And it's interesting to note as well that if you look at the forecast for dry and non-fat dry milk, that forecast is not necessarily seeing any type of rebound anytime soon. So we expect the price of skim milk powder to remain depressed in 2018 and 2019. For more information, I would invite you to check our website or the Ag Economics section on the FCC website at fcc.ca as we're getting this 2018-19 marketing year on the way.